What do you need to be a profitable trader? Especially when you're a beginner and you're just learning, how can you really make money in Forex? In this video, I'm going to help you out. I'm going to show you a simple strategy that's going to help you make money. You're going to be able to find profitable setups with very easy price action principles. I know this is going to bring you a lot of value, so I want you to go ahead and hit that like button. Hit that subscribe button because it's going to help us get into the YouTube algorithms. It's going to help us push this out to more and more people. And while you do that, guys, I'm going to roll this intro.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. When you trade and get paid, 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 oh yeah, trade and get paid, trade and get paid.
What's going on, guys? Joe Giunta here with Trend Trading Academy. I'm here to help you trade and get paid. In today's video, I'm going to show you a simple support and resistance strategy that a beginning trader, a brand new newbie trader can use, and really you're going to be able to look at the charts and see some very simple things that are going to give you indication of what to do in the market. All right, there's a couple of things you're going to need in the market if you're going to be profitable and if you're going to be successful. One of them is, and first and foremost, I don't care what anybody tells you, first and foremost is risk management. You need to know that you're going to take, in my case, I do 1%. I risk 1% in every trade no matter what. That's it. I use 1% risk, but I have a 2% reward. So I use a 1 to 2 risk reward. If a trade doesn't show me by looking left and by looking at market structure that I have a 1 to 2 risk reward, I'll just pass on the trade. It's really not worth it for me to risk $1 to get $1, right? Does that make sense to you? Why would I risk $1 to get $1? Why would I risk $10 to get $10? Why would I risk $100 to get $100? If I risk $1, I'd like to get $2 in return. You know, that's what the banks do. They're not just giving out money for free. They're not just taking risk for free. So what we're gonna do is we're gonna learn how to take 1 to 2 risk reward with a set percentage. I hear guys saying that you could just take a 20, I just take 20 pips in my stop loss no matter what. Well, that's not gonna find successful trading. You're not gonna be successful that way, because what if that trade calls for a 30 pip stop loss? Or what if that trade calls for only a 5 pip stop loss and you're leaving yourself so much, wider on your stop and more risk involved when it's really unnecessary. It really depends on what kind of trader you are, scalper, day trader, swing trader, really. But you can't really just use a flat lot size because market structure doesn't really work like that. What you want to do is look left and you want to see how many pips is in your stop loss. So if you're risking 1%, you got to figure out that math. If you have a $1,000 account, 1% is $10, right? And so if you're risking $10, 1%, your minimum reward would be $20. And so you have to ask yourself, what is my lot size? Well, if you have a 10 pip stop loss and you're risking $10, well, simple math. You would use a $1 lot size. So your potential loss would be $10 at $1 per pip, and your potential gain would be $20 at $1 a pip, because you're using a 1 to 2 risk reward. That's the first thing you have to master. You have to get risk management. You don't want to risk 1%, 1%, 1%. You get a couple of wins and now you say, well, let's turn it up, and you risk 10% and then you lose and you wiped out all the wins that you just had in your previous trades. Don't waste your hard work like that. It took like learning and hard work, and you've been grinding to get these wins, and then you're going to give them all back because you got greedy or because you didn't really have some structure to your trade plan. Be patient, and risk management is number 1. Number 2 is you need to have discipline. You need to have a trading plan. You need to have that stuff in writing, like a journal. You can go buy my journal, tradinggetpaid.com, go get that journal. But either way, whether you buy my journal or whether you just track it on paper, Excel sheets, whatever you want to do, but you need to be able to track your trades, and you need to know why you're getting into trades. What is your strategy? What are the rules to your strategy? Do you have a confirmation checklist? What are you doing? Like, why are you getting into trades, right? Because you can't manage what you don't measure. And essentially, at the end of the day, you need to be able to know why you're getting into trades, why you're getting out of trades. And then at the end, when you win or lose, you need to know, why did I win or why did I lose? Because you can't duplicate or replicate a process that you really don't know happened. And you can't stop a bad process that you don't know how it happened. So you need to be able to track your trades. That's number 2. And number 3 is you need some simple strategy. You need to understand price action patterns, chart patterns. You need to understand whatever that strategy is for you. I'm not a big indicator trader. We do have the one indicator that you know, I designed it, so I trust it because it's based on my strategy. But outside of that, I don't really use indicators. I'm a price action trader. And fibs are real powerful, even though some would call that an indicator. I don't really see that as an indicator as much as a charting tool. But I think market structure, price action, that stuff is king. So you need to know that. And simple things like what I'm going to talk about today is support and resistance. If you don't know support and resistance, I want you to stop this video right now. And I want you to go back to Trend Trading Academy and join, because you probably need to take some beginner classes. You really can't rely on these guys that are just out here, you know, throwing 100 strategies out here at you. You really need to know the basics, okay? So, you know, get education, however that is. Invest in yourself before you invest in the market, right? So, but back to where we are. I'm going to show you some simple support and resistance stuff. And this is really how I built myself into being a profitable trader. It wasn't on all these fancy strategies and indicators and, you know, bots and all kind of crazy stuff like that. I found success in the market simply because I took very simple price action things like support and resistance, supply and demand, which is a little bit later. I'll do more videos on that. Market structure, trends, fibs, golden zones. I took things like that and I used them to my advantage. I understand where breakouts and retests are, and the very, very core of that starts in understanding support and resistance. So that's what we're going to do today. I'm going to show you a support and resistance strategy that's going to help you master these markets. So let's get to it. All right, so guys, when we're looking at a chart here, I'm looking at GBP AUD 4 hour. That really don't matter because it's the same on any chart. But essentially, support and resistance is very simple. Support is when you see an area that has been tested multiple times, and you see, for an example, like this, right, where it's been tested and respected, and when it came back down to that same area, it was respected again. So in other words, it couldn't break. Let me show you here. It didn't break through to the downside. It was respected in this area right here. Came down, tested, and pushed up. All right, that is support. Now, when we look here, and when price came back down to that same area, right in here, well, what did it do? It rejected or was respected that area again. And what happened? Another push to the upside. Because generally what happens is when you see an area that is tested and respected, when price comes back to it, it's likely that it's going to respect it again until it doesn't, right? And I'll explain what I mean by that. So when you look forward here, this area gets broken right in here, right? And so when you see price came down and it broke this area, watch what happened. The same area right here, right, at the bottom of this little support area, became resistance. It came up here, it kind of rejected before it broke again. All right, so what we find out here is this, and I'm going to kind of show you in a little bit easier fashion here. Watch this. So when we're looking at the charts, right, let's look at this, and this is going to be our resistance, and this is going to be our support. When price moves, we know that price doesn't move just in straight lines, right? We wish it did, but it doesn't. So what happens is price comes up here and it comes to an area like this. And what happens is once it breaks through, it comes and tries to test it to see if it can break back down, right? If it can get back down. But this area becomes support, and what happens is it'll get tested several times. And then once it actually pushes up, it'll come to areas where you'll start to see where price respects certain areas over and over again. And so when you see it on the bottom side where you see price respect this area, this area, this area, and you see it happen like that over and over again, this is support. This is essentially something holding the market up from being able to go down. Now on the upside, this is called resistance, when the market is trying to go up but it's being resisted and essentially it doesn't have enough strength to push up. And when you see those areas, those are very important because they show us areas of, key areas in the market where the banks are going to move money. Okay, so now watch this. Here's what's cool about it. When we end up seeing a support, maybe it goes up and tests up here, comes back down, tests it again. Eventually, what's going to happen is you're going to get a big move that's going to break the support. So it was tested, tested, tested again, and then finally we see it broke. Now, here's what's going to happen. It's inevitable. It happens nearly every time. Once that support level is broken and price goes lower, it's going to come, and what used to be a support, what used to be a floor becomes a ceiling, and what used to be a support becomes a resistance. And so now price is moving down and tests that same area that was a support to it before is now a resistance in a down market. Okay? Now the same is true for a resistance. What was a resistance, we see it reject. It rejects, comes down, rejects again, and then finally it breaks. Okay? And so what was an area of resistance in this area right here will end up becoming an area of support. And you'll see the market move and test the same area before end up breaking again. And so what was resistance becomes support, and what is support will end up becoming resistance. Now let's look at where we are right here, and I want to show you how this area here, resistance, support and resistance, isn't always exact, right? It doesn't always come right to the exact spot, right? Because the market just doesn't move that way. So what we do is we understand zones. Rather than just dropping a line on it, it's better to put a zone on it, because then we know, kind of with wicks and bank manipulation and stuff like that, which is another lesson for another time, we can see where these things are going to happen. So in this particular case, we saw the market set right here, it rejects right here, it rejects right here, and then when it comes here, it rejects again. Now here's what we can do. One way to trade this would be to trade away from the resistance every time. There's one right here. You can trade away each time. So if that's the case, if we know that this is going to reject in here, we would want to trade away, right? We wouldn't want to trade into a place of resistance because the market could go against us. So when we see resistance like this, what we would really want to do is we want to trade away from it. That's one way to do it. So let's see what happens here. Okay? So we see, look at that. Price ends up pushing away again, and we got a really nice trade opportunity right there. Engulfing candle, and it just continues down. Really nice trade opportunity right there. And as you can see, it just continues to drop. Now, here's what's really awesome about this. Okay? So remember this. The same thing about resistance is the same thing about support, right? So if we had resistance there, then wouldn't this be a support here, right? Because every time the market came down from the top, it rejected this area right here. So we see a rejection and a push up, a rejection and a push up, a rejection and a push up. So how could we trade that? Well, when we see these rejections, we could trade it back to the upside every time. We could trade to the upside away from support. We don't want to trade into support this way because we would trade into an area that could potentially turn against us. So we want to trade away from support and away from resistance. We want to buy away from support and we want to sell away from resistance. Okay? So that's one way you can trade it. Another good thing you can do there is use trend lines, and that's another video. You can go watch the video above. I'll tag one of my trend line trainings right there. But you can literally just drop a trend line on it, watch the break, and then trade it like that. Really great strategy, and that's a little bit more advanced, but not really. So we see this area of support, and now we see that how it broke, right? We see this area right here that was a support before, and how every time in times past it came, rejected, and then pushed back up. Came, rejected, and pushed back up. Came, rejected, and pushed back up. Well, this time when it came, look what it did. It broke, okay? And so let's see what happens here. Let's kind of see what happens here as the market drops. Look at a beautiful opportunity right here, right? So if we see that a support is broken, all we have to do is wait for the retest of it, right? And we just simply wait for it to break. That is a retest. So it breaks, retests, and here's a beautiful opportunity for another trade. So we trade the retest of the break of support. And what used to be support now is resistance. Okay? So very, very simple, easy trading right there. But even further, watch this. Once price continues to push down, watch what happens. As price moves, and we're talking about a lot of movement here, look what happens here. What used to be a major support right in here, we saw the small break right here. Then we see it kind of came back up, because remember what happens, what used to be support will become resistance. Okay? So if at this point when price is in here, we are just being patient and we're seeing, does price break back through and go up? Or does price reject in this area and push down, because now it's a resistance, right? And so we would do the same thing that we did here, we'll do here. Okay? So all we have to do is just wait and watch. How do you trade this? You just simply wait and watch. And there you go. Once you see that, that's our indication for a trade. You could take that. There's a retest right there. And look at that. That right there is your breakout. Here's your retest. Here's your trade. There's your money right there. Beautiful, beautiful trade. Why? Because what used to be support became resistance. We got the breakout, we got the retest, and there's your entry. Beautiful, beautiful trade. What does that look like? At that moment right there, you're looking at, and this is a 4-hour chart, you're looking at about 230 pips. So at $1 a pip, that's $230. At, you know, standard lot, you know, we're talking about $2,300. I'll leave that up to you. And, you know, that's really essentially what we want to do. We want to trade away from strong levels. So all we have to do is look back and find areas that were strong levels before and where they were tested multiple times. We don't just want something that was tested once. But when you see something that was tested multiple times and then broken, once that was broken, all we have to do now is wait for that retest. Once price comes back to that area that was tested before, that was such a strong area before, Once it's tested, broke, tested, we're simply waiting to see, does it continue to push or does it reject? It doesn't matter to us because we really don't care about bias. If that was to go back to the upside, we would have done the same thing. We'd wait for it to break, retest. There's our entry, and it pushes up. In this case, it rejected, pushed down. There's our entry. Boom. Beautiful move. Okay? And so we literally take that, look left, right? How do we know when to get out? Well, it's actually super simple. We just go and we drop lines right here. One. Okay? We can drop a line there. And we just look left, right? Look, where did structure happen? There's one right here. So you just look, and you want to have multiple take profits because you want to be able to guard yourself. So if this right here was your first take profit, when price moved, we would want to take some profit there, move our stop loss into profit, and then wait, be patient, and get to here. Okay? Once price gets into here, we would want to take profit, move our stop loss into profit, and we could potentially ride it down to here. You generally don't want to take it all the way to the bottom. You want to, if you know that this is your bottom, you want to come maybe to the top so you can kind of make sure you give yourself some wiggle room there. But very easy trade. You just want to trade away from structure levels. Wait for the retest right here. Wait for the break, then the retest, and then trade. There you go. Really, really nice setups. And we can find these all over the market. So that's how you would trade support and resistance. Wait for everything to turn around. What was support will become resistance. What is or was resistance will become support. And you can make money in either direction. Alright guys, there you have it. I hope this video brought you value. This is a simple beginner support and resistance strategy that doesn't take a lot of understanding, that you don't have to be in the market 5 years or nothing like that. If you could just identify where support is, you know, where the market is tested. Once that breaks, it will become resistance. So wait for that to be tested as resistance and take your sell. On the opposite, you want to wait for something that was resistance consistently. Once it breaks, wait for price to come back to that area that was resistance now as support and take the buy at that level. Wait for confirmation. Look for price action, which there's some more videos that I got about that. Look for pin bars and engulfing candles, dojis. You know, there's candlesticks that you really need to know about that are going to give you precise entry, but based on market structure, this strategy will take you to the next level. All right, guys. So I hope this brought you value. Don't forget to like, comment, subscribe. If you want to become my student, go to trendtrading.academy. And for now, guys, I'll see you in the next class.